Like I said, the two newsmakers today are going to be MCX as well as Financial Technologies on news that they have now backed the SEBI nod to actually operate or rather start equity trading platforms, and that clause includes a nod for commencing operations in new asset classes as well. Remember, they've been granted permission to deal in interest rate futures as well as wholesale debt segments. Some other clauses include that MCX as well as Financial Technologies shareholding in equity share capital of MCX SX is now going to be brought within the 5% limit, and that is going to happen within a time span of 18 months. And MCX as well as FTIL are going to reduce their rights over equity arising from warrants within about 3 years. And the combined voting rights of Financial Technologies as well as MCX cannot exceed 5% at any point of time. So let's understand these clauses a bit better and what this means for shareholders. Jagannathan Thunuguntala, equity head at SMC Capitals, joins in on the show. We'll also get you views from Sandeep Parekh, founder at FinSec Law Advisors. Jagannathan, first, I want to come to you. Your first take on this particular news and what it really means for the shareholders of MCX as well as Financial Technologies.
One is it's a very, very significant development, no question about that. A country which is known for these two stock exchanges and altogether finding one more stock exchange is not a small event. And moreover, I think this new competition can give a altogether new elevation to the whole ecosystem, be it brokers, be it investors. It may help in reducing the transaction cost as well in this competition. Already BSE and NSE were in tight competition, and MCX SX with all its innovative and aggressive management skills can come out with the new products. All in all, very significant development. And also the products like interest rate futures, which couldn't take off earlier when with other stock exchanges, probably may find a new house for their development. As far as the shareholders' point of view, I think it's a very significant development. Whoever has medium to long-term view, I think they can easily stay invested. If they already have positions, they can easily add more positions. I think it should be a significant development. Moreover, whenever this Financial Technologies eventually will reduce its stake below 5%, meaning thereby they have to offload some of the existing shareholding. So as a company, it will gain more and more cash. So that means that can help in growing the financial technologies in other segments of the business. Overall, it's very significant development for Indian capital markets.
Sandeep, just want to get you in. Do you think the twin time frames prescribed by SEBI to meet the minimum shareholding cap of 5% and to deal with the warrants of promoters is sufficient? And do you foresee a smooth road ahead for the promoters?
I'm one of the people who consistently argued that the 5% cap is unprecedented anywhere in the world. So I'm one of the people who think that the cap itself is wrong, and not a single country in the world has it. But given that SEBI board has in its wisdom decided on it, I think they've given 18 months time to the group entities to bring down the stake as defined by them, and therefore I think from what I understand they need to bring their shareholding down to 5% levels within 18 months. And from what I also understand, the voting rights will remain capped even in those 18 months. So I think it's a good development, even though I may disagree with the position itself of the 5% cap.
Jagannathan, our third exchange for a trader means better service, low spreads, low brokerage. But for a shareholder of FT and MCX, this is more like a neutral news because if the shareholding in next 18 months will be down to just 5%, this entire up move will not be captured.
That is true, but the fact of the matter is that the very fact that now they came into the big game of equity itself is a very positive news, because earlier there was a big legal overhang, there was uncertainty risk, etc., etc. Now all that got cleared. To that extent, it is mildly positive news. And as far as the offloading is concerned, yes, I think to that extent it may not be, but nevertheless, I don't think even the MCX group will complain it much, because they always have been maintaining that they want to be umbrella service for all their products. For be it commodity, currency and equity. Now they are getting it. And moreover, what we have to remember is that already the management has the enough skill set and experience of handling the large scale exchanges, meaning thereby they need not do that much additional hard work in putting all the things together. They already any which way is part and parcel of the game. So while that 5% cap may be a small hiccup, but in the scheme of things, I don't think they will complain it much.
Jagannathan, give me a reason why traders should shift to MCX.
Yeah, one is shifting to the financial technologies is an obvious choice, and shifting to MCX, I think it's more of a maybe one is the sentimental reason, and so that, and moreover MCX, the holding that they have in MCX SX, I think that should also get benefited. Moreover, what we should remember is that when MCX IPO came, why we were one of the syndicate members. A small disclaimer is that MCX, while everybody appreciated, only thing is there was some school of thought that maybe it is slightly expensive. Now, considering that new avenues came, probably that question of overvaluation may get addressed to some extent. So some of the investors who are staying away because of valuation concerns may step into the game now.
Sandeep, what kind of game plan do you expect now from MCX SX as far as attracting brokers and listed companies is concerned? And do you think low compliance costs and new products will be their strategy?
We currently don't really have a duopoly. I mean, if you look at both the derivatives trades and the equity trades, if you look at last SEBI annual report, BSE actually has a 3% market share. NSE is kind of the gorilla in the room. And therefore, I think MCX will clearly, it's got its task cut out for it to kind of meet the challenge, and hopefully they'll be able to kind of provide better technology. I mean, given its roots in high technology, roots, hopefully they'll bring in new technologies which will provide sufficient competition, bring new products, create new environments, and again, it's a big challenge, but they seem to be up for it. They've fought for so many years to get this license, and I'm sure they've not been fighting without a business model in place.
Jagannathan, MCX is up 8.5% in last 5 days. It is at 1156. Financial Technologies is down 1% in last 5 days, and yesterday it shut shop at 753. Where do you expect a bigger pop today?
It should be healthy, very healthy. What we have to remember is at the time of that MCX IPO, the financial technologies went all the way to 950. From that point, it has cooled off. Probably after this news, probably the stock will have legs to move towards that 950 level again. I think that dilution point is the only hiccup or the main challenge. I think need to be seen how the market will read it and digest it. Barring that, I think there is a reason to believe that financial technologies may be moving towards that 950 again.